Financing Fusion Energy. Please welcome our speakers, Dr. Rachel Slaybaugh, partner at DCVC, Dr. Scott Hsu, partner at Lowercarbon Capital, and Dr. Andrew Lowe, co-founder of Rutherford Energy Ventures, and Charles E. and Susan T. Harris Professor at the MIT Sloan School of Management. Nicholas Furst, Associate Director of Fusion at SCSP, will moderate this discussion.
Good morning, everyone. Good afternoon. Good afternoon. Not sure my mic is on.
That's not on.
No. Good afternoon, everyone.
Lunchtime entertainment.
Good afternoon and welcome. Okay, perfect. I hope you're all enjoying your lunch. A little hard to see it from up here, but it smells delicious. So today I am thrilled to be joined by these three movers and shakers in the worlds of finance and fusion energy. Before we get into things, I would like to give these three speakers the opportunity to introduce themselves briefly, describe who you are and what you do. Rachel, how about we start with you?
Sure. I'm Rachel Slaybaugh. I'm a partner at DCVC. We're a deep tech venture capital firm. I'm a nuclear engineer by training. I used to be a professor at Berkeley and a program director at ARPA-E. And at DCVC, we invest in, for us, deep tech means anything where there's a significant data and compute component that accelerates the company's advantage. We do a whole bunch of kinds of things, including fusion, fission, energy, that kind of stuff.
Scott?
Hi, everyone. It's great to be here with you all today. My first time back in DC since I left, so it's great to be here. Scott Hsu, fusion partner at Lowercarbon Capital, a venture capital firm, also investing in hard tech, climate hard tech companies. And as my general partner at Lowercarbon likes to say, we are supporting companies aiming for energy abundance without turning the earth into an open pit mine. As many of you know, I was with the Department of Energy prior to this as the lead fusion coordinator, and ARPA-E prior to that as a program director for its fusion programs, where I overlapped with Rachel. Prior to that, a long career at Los Alamos as an experimental fusion scientist.
Hi, everybody. My name is Andrew Lowe. I'm a professor of finance at the MIT Sloan School of Management. And for much of my career, applying mathematical and statistical models to investment problems, hedge fund strategies, and now, most recently, deep tech investing. I'm also a co-founder of Rutherford Energy Ventures with my MIT colleague, Dennis White, focusing on applying analytics to fusion investments.
Great. Thank you all so much for being here. Stacked cast, if you couldn't tell. So investors have to navigate the immense opportunities, risks, and uncertainties in this rapidly evolving industry. So to that extent, Rachel, could I ask you to kick us off by explaining to us to what extent you would say that the current amount of private funding in the fusion industry, over $11 billion at this point, can be tied to public investment in early stage commercialization programs?
Yeah, I mean, I would say the private funding that is coming in now is so deeply tied to public funding that came before. And some of that is long-standing with, basic experiments and computational tools. And some of that is much more recent. And I think the current ecosystem and the vibrancy of it, we can really, I'm going to point to Scott and thank ARPA-E, because really, over the last 10 years, they've brought a commercialization lens and a new frame of how to think about what we should be working on in fusion from a very commercialization focus. And I think Pat McGrath might be in the room, Will Regan, there are a number of people at ARPA-E who worked on this, but it was really that it's not just science, how do we think about what power plants are going to be commercial, what fusion technology is needed to drive these things forward. And I'll let Scott maybe talk a little bit about it more, but I think without that, we would still be working on sort of like two things without that commercial mindset or a clear path forward.
Yeah, indeed. It was really great to be able to plant a lot of seeds at ARPA-E and kind of help grow the ecosystem you see today. But I also want to acknowledge, the bold pioneers in the private sector at that same period of time, who struck out and really took the risk of standing up that ecosystem also. So I think it was a parallel effort there. I'll also add, at ARPA-E and then later on with the DOE milestone program, we did really show that federal funding could have a very important catalytic effect. At ARPA-E, the rough numbers were something like 5-to-1 of follow-on private funding from the federal funding we invested in fusion projects. And with the milestone program, of course, FES will have the best data, but I believe the numbers are even higher in terms of how much private funding has followed on after the milestone program selectees were announced by those milestone companies.
Andrew, could you give a sense for our audience, who are the kinds of investors active in the fusion industry right now? And who are the types of investors that will need to enter the industry if companies actually want to realize their timelines?
Well, let me start by pointing out that one of the earlier panelists talked about the tech stack involved in fusion. But I think we also have to focus on the capital stack because obviously you got to pay for stuff. The current investors are a mix of venture capitalists, some strategics, energy companies, family offices, foundations, and so on. And the reason that it looks like such a kind of a mixed bag is because fusion is a very complex technology and requires a certain amount of both insight and leadership, but also some courage and willingness to take on not just risk, but uncertainty, where the term uncertainty is used in the economic sense of the unknown unknowns. And so right now we have a variety of different investors that are really used to taking on both risk and uncertainty, but it's a relatively small group. In order for fusion to realize its true promise, that capital stack is going to have to grow over the next 5 or 10 years. And we're going to have to add to the existing capital investors who are not necessarily willing to take on uncertainty, but certainly happy to take on risk. And once you tap into that pool of capital, you're now increasing the amount of funding on the order of $10 to $100 billion. That's what it'll eventually take from this point forward.
Okay, so pulling on that thread a little bit, what will it take to actually turn uncertainty into risk, right? To get from the unknown unknowns to the known unknowns?
Well, I think there are a number of pathways to get to that point, that inflection point, but I'll propose one milestone that I think we're going to be hitting in another year or two, and that's Commonwealth Fusion Systems and their Spark project. Once Spark goes online and demonstrates commercial Q greater than 1, at that point, my guess is that, or soon thereafter, they will do an IPO. And maybe it's not CFS, maybe it's another one of the fusion companies, ZAP or Examer or any number of them that have that moment where, from a commercial perspective, they are able to achieve a demonstration project. At the point at which the first fusion company does an IPO, I believe that that will be the inflection point where now you will see tremendous amounts of money coming into the space to take something that started out as a science project, turns it into an engineering project, and then now it becomes an infrastructure project. That's the sequence of events that I think will happen.
Mm-hmm. Mm-hmm. Talking about milestones, Scott, you played a key role in standing up the milestone program during your time at DOE. Could you describe for us the logic of tying or conditioning the disbursement of federal funds to a company's achievement of a technical milestone, as opposed to a more traditional financing mechanism?
Yes. So there were a couple of things we were trying to fulfill with the milestone program, both on the policy side, but also in the kind of nuts and bolts of how you send out federal dollars. On the policy side, this was really about moving at the speed of the private sector and allowing the private sector to take the financial risk of what they were doing. So in terms of providing federal payments for them meeting milestones, first of all, they were the ones setting the milestones that we helped negotiate because that was part of their roadmap, as Ryan said earlier on a panel. But secondly, they were taking the financial risk, right? So we wanted to be able to contract these agreements in a way that were very simple. Sorry, I think my mic is falling. That were simple and had reduced accounting burdens. And in order to do that, there were only certain ways to be able to sign agreements from the Department of Energy to do that. Yeah, so those are the main reasons. And then, like, also back from the policy standpoint, we wanted the milestone program to accelerate progress, right? Earlier we talked about speed from one of the earlier panels. We wanted this program to allow the private sector to move at speed. And finally, I'll add, a reimbursement model is what brings in these accounting burdens, right? To account to the taxpayer that companies, are doing what they said they were doing. With a milestone payment, we were actually not paying for the company, to be doing anything in particular. We were simply paying them when they met a milestone. So that gave us flexibilities in the way we signed these agreements.
Scott, sticking to the milestone program, could you tell us for a second what you think the future of that program is? Where should it go next?
Yeah, well, I think we covered those points well this morning and also in the report, but maybe to reiterate, we need to fund the program at a level that it was designed to do, right? Up to 50% federal share of the project cost. That would really be greatly catalytic to the private investment side. And then secondly, as the report rightfully states, we should be ready to deploy a demonstration tier of the program when this whole community is ready to embark on that.
Rachel, could you give us a peek behind the curtain? Describe how a VC like yours might discuss investing in a fusion company, particularly with regard to projected returns on investment.
Yeah, it's a good question. I will say for investing in fusion, the ROI calculations are a bit more hand-wavy than in some other sectors. But really, it's a bet on fusion enthusiasm to some extent. It's saying, okay, why are we on the precipice of accomplishment? And so it's looking at where is the science, what are the breakthroughs that have allowed progress now that are, have us in a different spot? And then sort of looking around and saying, what could fusion be worth? And some of that is actually based on electricity generation, and some of that is, to be honest, just based on sentiment that people love fusion. And we aren't expecting that we're going to have revenue from many of these companies. We're not doing a discounted cash flow model. We're really saying scientific accomplishment is going to be worth a lot. And just as Andrew was saying, maybe you can go public after you hit a fusion breakthrough. Or maybe you have a large secondary, which is where an investor buys the investment shares that you have at a big uptick. And so it's kind of there's real demand, there's real scientific progress, and there's just sort of like euphoria about fusion.
Can I chime in a bit too? I think the way we look at it at Lower Carbon is, we've built a portfolio there, a stable, if you will, rather than back a single horse. And I think in the past few years, the confidence in the entire industry has been growing, right? Each individual company and approach still carries rather, high technical and commercialization risk. But when you look at the whole industry, I think a lot of our LPs and investment partners are quite positive that there is money to be made here, right? And the other point to make is we think there will be liquidity opportunities on the venture timescale within a decade. This is not to say that a company should IPO, or this is not to say that we will be selling electrons to the grid on this timescale, but that there will be liquidity opportunities. And in the end, as investors, that's what we're working toward, right? Whether these things should happen or should not happen, if the opportunity is there, the investors are gonna be interested.
Any reaction to that, Andrew? I saw you nodding your head.
Yeah, no, I agree 100%. I think that if you think about industries like biotech, where you're dealing with first-of-a-kind technologies routinely, and where the horizon for developing a drug from beginning to end is 10 to 15 years, not that different from where we are in fusion right now. And so you don't have to have electrons on the grid in order to get liquidity. In fact, it's really going to be kind of like a relay race where the first leg is going to be to get that demonstration project. The second leg is going to be to figure out how to commercialize that in a power plant, and so on and so forth. So there'll be multiple opportunities for investors to come in and out and to rotate that capital stack to the point where eventually you'll have a full stack of all investors, just as we have now for biotech.
And Andrew, you are a student of deep tech sectors. So could I ask you, what lessons from some of these other sectors could offer the fusion industry, especially in terms of what to do and what not to do to accelerate progress, minimize risk and uncertainty?
Well, yeah, there's some common denominators among all deep tech ventures, whether it's fusion energy or biotech or quantum computing and so on and so forth. And the basic challenge is, how do we take an idea from the laboratory and bring it all the way to commercialization and generating profits, never mind revenues? It turns out that for deep tech ventures, that's a 10, 20, 30-year process. And the bottom line is that there's no single investor, other than perhaps the government and certain very, very unique nonprofits. But for the most part, there's no investors that can stay in it for a 30-year horizon. You got to get liquidity before that. So the first step in any kind of deep tech venture to make it financeable, to make it realizable, is you got to break up that 30-year period into digestible chunks. Now, in the case of biomedicine, it turns out that that is done naturally thanks to the FDA. They take a 10-year horizon for developing a drug into phase 1, phase 2, phase 3, and so on. They're not doing it for the sake of venture capitalists and investors. They're doing it for other reasons. But that process of knowing where you are in that value chain and being able to get liquidity at each of those different milestone achievements, that really allows capital to come in and out and flow. So the milestone program that Scott described, that's an example of a way that you can break up this multi-year period into more digestible chunks. But the other way is to create a third party, perhaps a rating agency like Moody's or S&P, or maybe like underwriters laboratories, that certifies milestones as they occur, so that you can basically allow individuals and investors to get in and out when those achievements have been made.
Rachel, Scott, any reaction to that? Agreement, disagreement? A secret third thing, perhaps?
Yeah, no, I think this, having an independent agency that can help provide verification along the way, we would find quite valuable, especially in something as technical as fusion, where very few investors can do the assessment to actually understand the technology or underwrite the risk. And to be honest, we look into the future and we see some risk of maybe fraudulent reporting is a little too strong, but people not entirely being accurate about the technical progress that they report. And so how can you have a group actually do some stamps of approval so that the investors who shouldn't themselves develop plasma physics expertise can evaluate these companies accurately?
Yeah, no, I completely agree. I think the only thing I would add is, the DOE milestones at this point, do serve that function to an extent. I think if we were to have an FDA equivalent, it could be an interesting prospect. And just the last point on milestones, as investors, once we've invested in a company, we want to support value creation in those companies. And clear, meaningful, and verifiable milestones are the best underpinning of value creation in these companies.
Now, we already touched on it a bit before, but Scott, if I could ask you to share, from a broad perspective, perhaps, broad brush strokes, what are some of the criteria that you would use to determine whether to invest in a fusion company?
Yeah, so I can speak generally at first and then maybe a little bit more from Lowercarbon's perspective, which maybe is a little different since we are building a portfolio. From a venture perspective, the team that is backing an idea is very important, right? We look for capability in the team. This is not an easy road. You got to raise a lot of money. You got to convince talent to come work for you over not only other fusion companies, but other sectors and industries. So we look to very compelling leadership. Now, of course, we also look at the technical viability of the idea and whether it can become a commercial winner. So techno-economics is very important. From the Lowercarbon perspective, I would add, to add to our stable, we're also looking at this from a portfolio approach, as Andrew has talked about in other venues. Things that diversify both the scientific and the commercialization risk of our existing portfolio. Again, this is our fiduciary duty to our shareholders and to our limited partners.
Andrew?
Yeah, let me add to something that Scott mentioned, which is this notion of techno-economic analysis. I actually hadn't heard of that term until relatively recently, because from my perspective, it's just economic analysis. But you have to add the techno part, because there are some very technical aspects that have to be combined and integrated into the economic analysis. And so Dennis White and I are working on a paper that we hope will be published soon, where we propose the economic equivalent of the Lawson criterion, where in addition to the technical conditions that are necessary to be generating net energy, you also have to be able to generate net profits in order to make this work. And so I think that in addition to all of the elements that Scott mentioned, it's important to incorporate some sense of whether or not the engineering parameters will allow you to generate economically meaningful net energy. And I think that's something that has not really been focused on for understandable reasons. We want to get to that certain threshold where we have Q greater than 1 before we start talking about commercialization. But when we get to the nth of a kind fusion power plant, it's really going to be driven by the economics of whether the fuel cycle and the ability to be able to replace and keep the fusion power plant going on will be economically meaningful. And I think that's something that can be understood with a relatively simple set of equations.
Mm-hmm. So building on that idea, Rachel, Scott, how would something like the establishment of a national fusion goal to break ground on the first commercial or demonstration power plants by 2028, how would that actually change the calculus for investors?
I think it depends so much on the details. I mean, some of what we've seen from other sectors is if you set the goal in a way that's sort of unreachable, you may end up getting distortive behaviors that are not quite productive. On the other hand, if you set it to be too obtainable, which I don't think we're at risk of, maybe you don't get enough done. But if you get sort of the balance right, where you have an incentive structure that pushes people a little bit farther than they would be otherwise, and most of that is on the government side, where you can align interests to help solve regulatory problems, move programs more quickly, and get things done in a much more efficient pathway. That's the real value. Is so much of what's in the way is sort of like bureaucratic burden. And I'm not saying we should like get rid of all processes and do whatever we feel like. There's just an opportunity to be more efficient, and having a clear goal that can crystallize that can really add efficiency of action across the government, across the national labs, across the private sector. And so that's when a goal is set well. It aligns so that the pathway is smoothed and people's attention is really focused.
Yeah, I agree that the policy signaling is incredibly important, but I think just even more from a pragmatic standpoint, from the investor perspective, I mean, capital raises are hard, and raising equity financing rounds, especially at the billion-dollar level, it's just hard. And so I think having a clear policy signal from the government, as well as real demonstration scale funding from the government, will be extremely catalytic for the private sector.
Yeah, so this week, the Nobel Prize in Economics was announced, and the three winners, you know what they won for? They won for their theory, which has been demonstrated in a variety of contexts, of how economic growth is really supported by technological innovation. That's their Nobel Prize. And one of the key aspects of that, according to their work, is when government and universities and the private sector are collaborating. That is the most powerful form of innovation that fuels economic growth. With it, countries become incredibly wealthy. Without it, last year's Nobel Prize winners have shown that countries can become much poorer for it. So I think that really underscores exactly what Scott and Rachel said about the importance of policy, working with research, collaborating together with the private sector. Those three elements are critical for success.
Mm-hmm. Rachel, as a commissioner on the Fusion Commission, is there a certain recommendation from the report that jumps out to you as one that would move the needle the most for the private capital equation?
Yeah, I mean, I think there are, of course, a lot of good recommendations in there. And I'll say maybe it's not exactly a point, but a little bit of a frame that an important role for the government to play is on the cross-cutting technologies that help a range of companies. So it doesn't make sense for one individual company to fund an initiative that everyone needs. It really makes sense for the government to fund those things that lift all boats. And I think that comes through pretty clearly and helps radically reduce the risk for these individual companies where, to be honest, they are sort of counting on someone to solve it. And right now, it's not obvious who that someone is, and it's just sort of like assumed that it'll happen eventually. And so having a clear plan of who is solving those cross-cutting challenges, I think is quite important and very helpful.
So this is a question for all of you. Let's start with you, Scott, then move to you, Andrew, and then finish with Rachel. What are the biggest opportunities and the biggest risks that would affect the growth of the fusion industry? And then bound it by 5 or 10 years, however you want.
Well, I think the biggest opportunity right now is evidenced by all of us sitting in this room. You know, I think we've advanced the conversation significantly over the past few years. We're not, kind of debating on the policy itself at this point. We're kind of talking about the implementation. So I think there's huge opportunity not just to get to fusion demonstration as soon as possible, and I think everybody in this room is behind that, but also looking at the fusion supply chain, I think is a big opportunity right now. And somebody on the previous panel said we have to pursue these things in parallel, right? So I would point to that combination as real opportunity, and this is why investors are in it. I think the biggest risk is not moving fast enough. The speed part of it is incredibly important, and we are not moving fast enough. We have to clear barriers. Somebody also said earlier this morning, fusion's not just an incremental energy technology. It is a national security imperative. It is going to transform the way humans relate to energy and use energy. And the winner is going to dictate things for a long time. So we have to clear the barriers in order to move fast.
Andrew?
Yeah, so I think it's pretty clear the biggest opportunity before us is to bring a new form of energy to this planet. I mean, how often do you get to do that? How often do you get to even say that? We're creating a new form of energy that did not exist on this planet. And I think that within the next 5 years, I suspect that a number of investors today will be very, very wealthy because of their investments. So we're not talking 10, 20, 30 years. I think within a matter of just 5 to 7, we're going to see tremendous opportunities and rates of return for investments that are being made right now. To me, the biggest obstacles, the thing that keeps me up at night, has to do with lack of financing, because I don't think that there's any question eventually we're going to get there. The issue is who's going to get there first, and how much are we going to be able to scale between now and the next 5 or 10 years. And financing really is critical. I worry that we may have in this industry a Theranos moment as the biotech industry experienced, where if there's a fraudulent company that ultimately ends up bilking a large number of investors, that could set the industry back 10 years easily. Or some bad science, cold fusion could actually undermine the progress. And so anything we can do to create checks and balances to make sure that we're hitting those milestones and that we have investors coming to the table because they see that there's legitimate value here, that's going to be important.
So maybe a slightly different take, because I agree with everything that's been said so far, is related to that, not quite the Theranos moment, but in the ability to capitalize these projects in the long run. We get a first few fusion power plants and they don't work very well and they're very expensive, and the capital just won't come in. And so I think there's a real burden to be clear-eyed and honest about what it's really going to take, so that you don't sort of overpromise, underdeliver, and then there's no capital left because they underwrote your project incorrectly, and here we are, nobody will invest in fusion. And I think the opportunity, everything it said, maybe some of the opportunities to help catalyze this are the innovation that is being driven by really new and exciting computational tools like AI, where we can speed up the rate of discovery, and that can help resolve some of these challenges that are in the way for fusion working.
Well, I am so happy you ended on a positive note. Thank you so very much. Ladies and gentlemen, Andrew, Scott, Rachel, please give them a round of applause.